So break this down for me, because obviously we've seen this rotation into value start to flag somewhat. Does that mean with the uncertainty over inflation, we are seeing more consideration on whether tech still has a compelling long-term story?
We do. We actually saw tech has drawn down over the last few months because of rising bond yields. But I think the long-term story that they could generate revenue over the medium long term has not changed. We remained overweight tech. We like them. Of course, there are certain sectors within tech that we like more and less than the others. For example, we have been semiconductors for a little while now, but I think this sector has fully been priced in, and so we are booking profits. We're staying onto the software side, internet side of the technology sectors, and we remain overweight there.
Which markets in particular are? Because obviously we see a lot of risk concerns when it comes to trading in Hong Kong and China with some of the big listed tech names there. Would you be staying shy of Greater China?
Yeah, certainly at the moment, the hot topic is the regulatory risk on the big tech giants. I think the authorities are not only concerned about data security, they are also concerned about or uncomfortable about these tech giants' market dominance and sort of new business models, right, that may have some kind of potential systemic risk on the economies. So for the moment, it looks like the street is still sort of cutting estimates on these Chinese tech giants. So I think we advise investors to for the moment, to stay away from these Chinese technologies until such time where some of these tech giants come up with constructive safeguarding measures that may comfort the authorities. Then if they come clean, then we will like them again.
Are there any other tech stocks across the region that you like, perhaps not necessarily in China?
Yeah, I think some of the tech stocks that are not like within the tech sector, but benefiting other subsectors like healthcare, logistics, and so on and so forth. We think even these sectors will continue to excel even in the post-pandemic world. So we are still quite constructive from a bottom-up basis on some of these individual sectors.
Let me turn to another sector, commodities, because in this post-pandemic world and even during the pandemic, we saw food prices soaring, as this chart shows the UN food price now at the highest in about a decade. How do you play really those soft commodities when you're trying to hedge for everything from inflation to perhaps tech regulatory concerns?
Well, I think foodstuff, personally, I think foodstuff would continue to be in demand. Because if we continue to reopen the economy, of course, in the developed world, reopening will be a bit sooner than the emerging market world. But as the world moves towards the tail end of the pandemic, hopefully, consumption of foodstuff and probably higher value foodstuff will continue. And we do see a firm demand for foodstuff across economies. And that's why we actually also had an overweight position in agribusiness sector.